on this computer. Admitting some others. Am I able to give someone perhaps like control of host and they can admit others, Spencer? Would I be able to do that to you, or how can I do that?
I don't know if you can transfer hosting ability on the Zoom. I think I would have to start the Zoom. So I don't know. You could probably make me an additional host or admin.
Make co-host. There you go.
Yeah.
So you should be able to like let people in as necessary and what we're doing here. I think I'm recording now. Cool. So January 28th, big talk of the news today has been Wall Street bets, Robinhood traders, Reddit traders, Twitter traders, internet trolls, you name it. It's being talked about, and people are wondering what it is, what's going on. And are you guys seeing my screen? What are you seeing on your side? Let me see.
We see the Wall Street bets, dude.
Okay, so you do have the screen here. You're good. Some are just texting in saying that they haven't seen it, but perhaps you're on your phone. So if you're on the Zoom app, you should be able to see it. But talk of the town, the Wall Street bets, and what's going on, what's happening with this. So it's January 28th. You guys will probably look back on this date. Your kids will be asking about it. There's some big things that happen in the market today that is certainly going to affect the long-term conditions of market volatility, market policy, regulations. If you're here, I imagine you've traded before or that you know something about the stock market, have maybe gotten involved in trading. But none of us that I think are here, any institutional investors, work for big banks or are familiar with some of the more technical ways of trading. So if you're a Robinhood trader, just throw a little wave up so I can see you guys in the background there. But some of the things that are the big talk of the town is how great, get online, read a little information, go to Robinhood, buy Stonks, and then to the moon. That's the idea. So this is really what's driving huge momentum in the market right now. This week especially, people have been talking about this. They're sharing it with their friends. The internet is fast. So this is the idea. Read, buy the Stonks, to the moon. Now, obviously, we've seen this a little bit with GameStop. There's a good reason for that, and we'll talk about that. So who I am, for those who I do know who are here, for those who are not familiar, not your stock advisor, absolutely not. I do not provide personal investment advice. I'm not a qualified or licensed investment broker or advisor. Completely amateur, manage my own portfolio. But all the information that we're going to talk about in the last 40 minutes, any ideas, opinions, views, predictions, forecasts, all these things read in here, you guys realize that I will not and cannot be held liable for any actions you take as a result of anything you read or hear during this presentation. So we will talk about stocks. We'll talk about some other investment materials or investment vehicles, but conduct your own due diligence, consult licensed financial advisors, make sure you're making investments on your decisions. Everything's speculative. It's based on your information found, and anything you do is on your own risk. So who am I? Well, for those who don't know, I really appreciate you for being here, but just an update if you do and you're familiar from where I've come from. Some call me an accomplished business consultant, has experience working with small and medium enterprises, mostly started out in state and city governments, local governments. But I've been recognized as a thought leader in technology, artificial intelligence, machine learning, things like process, and really all things digital. One of the things you'll notice is that none of those are stocks. So maybe in the future, we'll be talking about stocks, but I have been featured on NBC, RT Insights, Market Watch, Towards Data Science, Data Driven Investor, other ones like the Yahoo News and more. But again, none of it's for stocks. And maybe this video will be the first one that gets highlighted on a big mainstream media or something like that. Wouldn't that be cool? But right now, my full-time job is the head of global content and digital experience for a digital intelligence software company called Abby. Now, Abby acquired a startup called Timeline PI in August of 2019, where I was the head of the company's marketing function. So all of my background is really in marketing. While at Abby, I've overseen the development of Abby Timeline's marketing, messaging, and positioning. Love talking to people, so I facilitated and drove the education to our global sales teams. Just finished up this week with the global sales kickoff, doing education to our partners, our customer channels, and all of our salespeople about the products and the things that we do. Before Timeline, I led an independent consultancy firm that was focused around small and medium businesses, state and local agencies, and really was focused around IT, streamlining, modernizing the citizen experience, and implementing technologies. So really just a techie guy. Education, studied business analytics, operations management, and then earned my MBA at Widener University in Chester. And I've earned an executive leadership certificate from Columbia University in the field of digital marketing. And then lastly, I still hold a faculty appointment. So I see some of my students are also joining in. An adjunct professor at Widener University in the fields of business management and media informatics. So let's get prepared to talk about stonks. Now, in the investing world, the terms bull and bear are frequently used to refer to market conditions. They're typically able to describe how stock markets are doing in general, but that is whether they're appreciating or they're depreciating in value. And as an investor, perhaps one that you might want to be one day, or where you see yourself as now, is it's really based on the direction of the market. It's a major force that has a huge impact on your portfolio. Are we in a bear market or a bull market? Bulls are going up, bears are going down, but it's important to understand how each of these market conditions are going to impact your investments. So in a bull market, this is when the market's on the rise. It's where the economy is doing good, the things are sound. And the bear market comes out, exists in an economy that is receding. So that's when stocks are declining in value. Now, a bear market can be more dangerous to invest in, and equities lose value and prices become volatile. A lot of people are saying we're on the verge of the next bear market. We've seen the last 10 or 12 years of really good market, a bull market run since the recession in 2008. Really, nobody knows. All of this is speculative. So if you're here to get rich quick, sorry to tell you, it's most likely not going to happen, but stick with me because I think I can start to explain a little bit easier, a little bit better about what's actually happening and perhaps what you need to know to stay involved, to get involved, and be a long-term investor in the market. So what do you need to know? So it's definitely understanding to speak the language. Now, things that you might be hearing and language that I'm using are things like stonks. Now you're like, well, what the hell is that? Because I'm here to learn about stocks, man. Well, stonks mean they're about stocks. There's just another name for stocks, but the term is misspelled on purpose. It's meant as a form of irony. It's really humor. This is really what all of this whole week has been about. It was about irony and humor. It was Main Street taking over Wall Street. So most often stonks is used when we're commenting on the financial loss of an investment because stonks always go up. So when you think about it, it really comes from the stonks meme. That's the one we see right down here in the bottom corner. The stonks meme. This meme features a ball animated character. The guy's dressed in business attire. And he's sitting there going through looking like the stonks meme man. And then there's some other terms we talk about as tendies. So if you're in any of these forums, if you're just getting involved on Twitter or Reddit, you're starting to hear about tendies. And tendies are this thing that Wall Street bets, a Reddit community, they're referring to gains or profits that they've made on an investment. So these are things that you want to know because if you're looking into WSB Discord or WSB Robinhood, these are the things you want to know. The next thing, Wall Street Bets Discord. Well, it's like the first time we're hearing Wall Street Bets on CNBC during the daily, the top 5 news in the media and the markets today. So Discord's an app that lets you do real-time instant messaging. It's really conversations with other users, but some would define it as a social media. You can really think of it like a Reddit, but it has instant responses. There was 50,000 users earlier this week. I think they're surpassed that and are just counting more. If you're looking to get a link to that Discord community, you'll probably hear my ringing in the background because I've been following it most of the day just to see what's going on. I can send you a link for that. Now, Wall Street Bets stems out of a technology called Reddit, and it's really just a community, a social platform where people share information. And throughout the pandemic, many have just been throwing what we would call YOLO bets, WSB YOLO, Wall Street Bets YOLO. And what that means, it really stands for Wall Street Bets, and YOLO stands for you only live once. And this is used in the Reddit community when someone's risking their entire portfolio on one risky stock or one risky option trade, and they're just YOLOing it. You're only going to live once, throw the whole bet in, and just see what happens. People have had their portfolios quadruple, 10x, 50x, all throughout the year. And there's some great stories about how people have been able to pay off their student loans, pay off their house, pay off all these things there's also the horror stories of how quickly things could go wrong, especially when dealing with derivatives like options. Now, the other thing is Wall Street bets Robinhood. Robinhood is the talk of the town today. Turned everybody off, wasn't letting people buy Stonks. Now, Robinhood is an app. It's commonly referred to people as the sort of retail gamblers betting application, retail investors gambling apps. Now, we're talking about Wall Street bets and Robinhood bets. So really, Robinhood was the mobile application that has allowed most retail investors to get involved in the market. It's definitely not as difficult to use as some of the big brokers. It's really easy, and it fits in the palm of your hand, right, in your mobile app. But they also have some pretty interesting options and tools to use on the platform that probably require a little bit skills and education to actually use effectively. But many people are using them in a way that some are getting rich and some are losing a whole lot of money. So if you have Robinhood, that's fantastic. I see some of you guys throwing your phones up. Now, if you've been to Wall Street bets, you understand that it's about people making money while also adding humor into the mix. Because why not? Now, it's certainly a great platform. Probably if you're looking to make a quick buck, it's probably a place you're familiar with if you've been there before. But really, it's a place to embark on engaging conversations with others who might be on the same wavelength as you. So if you're new to the scene, get involved on Reddit. Check out the Wall Street Bets Reddit. I've been there for a few years, just kind of enjoying it and seeing what's happening. Reddit as a community has daily discussions after all. So study the terms, look at the acronyms above, look at the things and start to understand what the heck people are saying. Soon enough, maybe you'll be a pro and you'll be predicting the next GameStop app or the GameStop skyrocketing ticker price. Now, we're talking a little bit about the Wall Street bets background, but I also think it's very important to start understanding definitions in the market, because if you're here to make, say it again, making short-term bets, YOLO bets, Wall Street bets, it's probably not the right thing, and it's super risky and tremendously risky, volatile markets. But looking at how you can get involved in the stock market to do more while you're still young, using that mobile app that might be Robinhood or something else, learning some strategies so that you remain disciplined, you have fundamentals to go forward so that you can invest better, whether you're investing in these vehicles or other vehicles. So market timing is the strategy of making buying or selling decisions on the financial assets by attempting to predict future market price movements. So if you're anything like the friends that I have on social media, you've been talking about GameStop for the last 60 days, saying how it's going to be the biggest thing, the biggest pump and dump of the year. And the Wall Street bankers are going to be losing their pants. Now, maybe that has been true, but it's really based on predictions based on the outlook of market or economic conditions resulting from technical or fundamental analysis. In this case, there's really not much fundamentals. So you think of GameStop, it's really not a stock that should be going up. But I'll get into that in the next slide. In today's world of no-fee discount brokers, real-time alerts, and the 24/7 news cycle, investors can often get lost, confused, and even emotional. Perhaps that's why you're here, because you either lost money, you're looking to get involved tomorrow morning, you're looking to get involved to make the next best bet so that you too could be a YOLO stock millionaire. Now, would it be cool that you could be a YOLO stock millionaire? Sure. But do you lose your pants? Do you want to lose your pants? Because the honest truth is that you can. So while professional investors often get lost in the weeds of earnings results, big tech innovation, trade wars, pandemics, and all the other things that full-time, institutional or the toots investors, they have stunning long-term investing results. Warren Buffett is notoriously famous for saying about staying in the market. Maybe today isn't the right day, but also realizing that returns happen over time. It's better time in the market is better than timing the market. So if you want to beat the professionals, you probably should adhere to a regular investing schedule and practice the principles of patience. So those are some of the things to follow. But what's happening this week, Raiker? This is what everyone's asking. Why is this happening? What happened? Where is it going? Why should I care? Now, GameStop is the one that everyone's probably at the top of the list. It's a video game retailer. Like most stores that still sell products in person, it has had an incredibly difficult year. And video game sales have moved online. And as the COVID pandemic keeps people away from stores, this thing's still in business. But do we really expect it to grow again? I don't know, because I asked my roommate the other day about his new console, and I heard you're actually paying an extra $100 a console to get a CD tray. So if you can just download all these games online, why would anybody be going to the local GameStop brick and mortar store? Why was this going to go and thrive in the future? Now, while across most of America and our local communities, GameStop's just a place to buy a video game. But on Wall Street, it's become the battleground, and that's why we're all here. So when you're looking at the swarms of smaller investors, most of those non-institutional investors, not accredited investors, I don't think we have one accredited investor in the room tonight. This is where it's the epic stand against the 1%. So while many companies are in rough shape right now, GameStop was one that was subject to what's called short selling. And in professional investors' terms, this is when they borrow shares of stock to sell it and then buy it back later so that they can get a return. But ultimately, they're taking profits when this stock goes down. And this one was over 100% shorted in the market, which meant there was less shares on the market, and people were actually betting more shares were going to go down. Now, this is why perhaps today's events occurred. One of the things that we have to recognize is that we still have to go on with the markets. There's still things we know that have to continue in what we're doing and how the financial markets in which we know them need to continue. Now, people politically will ask, well, why is it okay to do this versus that? And why can one do this and one other can't? Ultimately, all of our 401ks, our investments, our mortgages, many of these are sustained by the stock market. So the bottom line is what happened today with the stock market and with Robinhood is basically the casino. We're trying to cash in and we were trying to buy more. Perhaps we were trying to get more chips to go play red or black at the roulette table. However, the house didn't have the money. The market couldn't fund it. So really what you're seeing is that there was not enough capital to cover all the margin and all of the covered shorts that had to happen either on Wednesday, before tomorrow, as there's this incredibly large short interest. Now, GameStop was one of the most shorted of all the publicly traded companies. Others on the list that you might be hearing about is AMC Theaters, Bed Bath & Beyond, and even mostly the defunct Blockbuster, but still has an active ticker. Now, if you remember these names, and then you think about how GameStop became the topic of this short squeeze, it's really because two investment firms had placed huge bets that the money-losing GameStop stock was going to fall, essentially just thrown in the towel. So one is Citron Research. They were acknowledged in Wednesday's video that they posted in where they said that they've taken a loss of 100% on their gamble. Now, these are gambles, but most of these are big institutional investors who have the money to fund them. So for the most part, investors are following the buy low, sell high format when it comes to these stocks and these options. But short sellers are doing the opposite. They borrow and sell a stock when it's high, and they bet that it will continue to fall. Seems vicious, right? But when you think about a company who's not really doing well, it definitely makes a whole lot of sense. Now, if that doesn't happen and the stock price rises, the short sellers are forced to cover their positions and buy more stocks to minimize their losses. And today, they didn't have the capital to do so. So because short sellers and ones that are frequently hedge funds are betting against a company's success, it certainly can be a risky position to have. But the positive news for people like you and I is that as the stock and the volume comes in, whether that's on valuation, all of this pumping causes the minimizing of the profit for the short seller. So in the case of GameStop, all this chatter on the online trading forums invigorated interest in buying the stock, not just because they wanted to bankrupt a Wall Street bank, but because it was interesting. It was fear of missing out. It was something to get involved in the year that's just been from hell. And all of that volume, where even your $10 was in the market, was able to push the price of the stock up, skyrocketing this thing over 1,500%. So speculative trading left short sellers with no more shares to buy to cover their positions. You're talking about over 1 billion shares on the market traded. That speculative trading is nothing we've seen before. So if you had bought at a high price and then had to offload at an even higher price, it's where the data company S3 Partners is saying that its analysis found that short sellers have lost $23.6 billion on GameStop this month. All of this created by retail investors like you and I, small guys sitting in their bedroom investing through Robinhood. Wow. Think about it. Robinhood. Wasn't the whole theory of Robinhood was stealing from the rich to give to the poor? Maybe you're not poor, but it's the same type of concept. And it's really the perfect storm. It comes at the time when lots are hurting. Interest rates are low. We're looking at inescapable student debts. Major institutions had losses during a global pandemic. Our 401ks may not be thriving. But how does this all end? It's really probably why you want to know how Friday ends. Well, the short squeeze ends when the prices start falling back to where it was before the drama started. Certainly, we see that already happening today as more buyers who were coming to the market were not allowed to buy. Now, when you look back to 2008, when Volkswagen was in the middle of a trade tug of war, it briefly became the stock market's most valued company. But its price settled down eventually. And history suggests that stocks cannot go up forever. And over time, they generally reflect the expected future earnings of the corporations that they are supported by. But long shots can go on for extended periods of time. If you stick with me, we'll learn about why some others are good and why you should stick with us to learn a little bit about why you haven't completely missed out. Now, long shots can go on for these long times. You look at Tesla, it would need 1,600 years of profits to justify its current price to earnings ratio. If you don't know what a PE ratio is, we'll get to that. But these are things that are happening. This is the way the market is working. So the short squeeze. Some of these things I want you guys to understand, some definitions that go a little bit further that you might be hearing. Short position is the sale of the stock you do not own. You're selling short because you believe the price of the stock will decrease in value. If the price drops, you can buy that stock lower and make a profit. Strike price. These are the things that tend to expire. It's the time when the derivative contract can actually be bought or sold or exercised. The strike price is known as that exercise price. We got the bag holder. If you're here holding any of the stocks, you're a bag holder. You're the individual who holds the stake in an equity that's decreased in value, perhaps heavily. The bag holder is typically holding onto these shares or options in the hopes that eventually they're going to recover. To be honest, it looks like with technicals and fundamentals, they could. So this often results in sustaining losses over time and incurring more than perhaps they initially experienced. But maybe there's still good reason to be a bag holder. Because if you're a bag holder, perhaps you have diamond hands in this market. Now, diamond hands is when a trader is prepared to hold onto their stocks or securities for a long time. And if you're anything like me, you're loving some of these stocks because the nostalgia. How cool is it to own Blockbuster stock or Nokia, the phone that's basically a paperweight in your bedroom or your office? So this is where you want to hold on to this. Have diamond hands, hold on to these equities for a long amount of time. And this is really what the term diamond hands that you're seeing on Twitter. Now, the opposite is this diamond hands is when you have paper hands. It's when traders sell their stocks and securities far too early. If you were in GameStop earlier this week and you sold out, great. You missed out on about $160 of the upside. Now, if you're not trying to reach these max profits, sure, you're going to be referred to as weak hands. But take profits when you can. Why not? You deserve it. Got a short video here that I think you guys should be able to hear. See if I can get this to play. Because I don't want you to just hear from me. I want you to hear from some other experts. Can you guys hear this?
Yes, sir.
Back then, the German automaker briefly became the largest company in the world as a function of a massive short squeeze, right? It created countless legal battles afterwards. So let's get down to it, right? The company that I'm talking about today is a company called GameStop. It's a US-listed company of US origin, and this is what the stock has been doing lately. It almost doubled last night, and it's up 860% in 2021 so far. Well, these kind of gains are uncommon, but they're not impossible. So why are we talking about GameStop here? Let me tell you why. A brief history. GameStop is a brick and mortar video game retailer. They sell video game hardware and software via physical stores.
We will skip it. It seems to not be working. But ultimately, the one good thing that you guys should have heard from that is basically what it was capable of and how far it's actually gone up and really what the short interest was. And that's okay. But one of the other companies that's being talked about is a company called Nokia. Now, Nokia is another what we would call stock. It's another one of these stocks that are perhaps undervalued, shorted, looking to go down. But if you know anything about Nokia, it's one of these old phones, these old providers. But I'm going to talk to you why forgetting about GameStop and forgetting about some of these other things might be a better gamble, perhaps. Maybe you should be looking towards these things in the future. But again, completely up to your decision making. So the market that I'm talking about is the telecom equipment market. And this is something that Nokia is a company that's a high contestant in this, Ericsson and UA. And all of these, if you've had an older phone, you've probably seen Ericsson. You've most likely seen Nokia. Nokia is a Finnish multinational. They're known for IT and other consumer electronics. They're also traded in Finland and on some of the European markets. Ericsson is a company out of Sweden. It's multinational, again in networking telecom. They're headquartered in Stockholm. UA is a Chinese multinational technology company. They're headquartered in Shenzhen. They design and develop and sell telecom equipment and consumer electronics as well. Now, in June 2020, the Chinese telecom equipment giant Huawei lost out to Nokia and Ericsson in building Singapore's main 5G networks. Now, have you heard about 5G networks? Because if these guys are involved in it, perhaps there's something that's still relevant. Perhaps Nokia is still relevant if they're involved in 5G. The Singapore Telecommunications said it was in talks with Sweden's Ericsson to be the main vendor for its 5G and all of its localized networks. But really what happened is there was a joint venture that became formed between StarHub and a company called M1. And they selected Nokia as the preferred technology to partner and build this 5G network. Singapore plans to have a full island-wide standalone 5G network by 2025. That means Nokia is not going to nothing. It's different. It's not the same as the brick and mortar GameStop that has no reason to sell video games anymore. So certainly we understand why there might be some volatility here. Certainly we might understand why people think that the Nokia gamble is a good one, or why shorting Nokia is a good idea because it's heading to nothing, because of course, a phone from 1998 is not going to have value. But let's talk about why there's some value here. Because is it going to the moon? Very unlikely, but maybe. So when you look at Nokia and how it makes money and compared to others, it's not just a company that sells these old 1998 bricked phones. What it actually does is sell technologies. They have all of the technology that requires a cell phone to work today. When you think about how an iPhone works or an Android, there's chips that are inside there that are being made by Nokia. There's royalty payments and licensing agreements being paid to Nokia. Beyond that, they're doing ultra broadband networks, global servicing to other telecom vendors, IP networks, applications, and a boatload of patents that they're getting paid royalties on. So when you look at the trailing 12 months, the technicals, the fundamentals, the things that GameStop just didn't have. GameStop is crashing. It will go to zero. They will most likely be bankrupt because no one is heading to the brick and mortar GameStop to buy video games. Now, we understand why shorts are happening, but let's compare the fundamentals, the technicals to the industry. This is what Wall Street's doing. And here we are, a group of 24 people coming together to learn about some stocks. Now, the technicals, price to earnings ratio is what's called the PE, or it's the price of what the stock trades in relative terms to its earnings. Now, it's most commonly used metric for determining a company's value relative to what they actually earn. Think about it like your paycheck. If you valued your time and you wanted to trade, give some shares of yourself to your colleagues, you'd value it based upon how much they could earn over the next 12 or 18 or 24 months. And that's really what this is. So in this example, we're using the actual earnings or the EPS for the trailing 12 months. So these are things that would be the TTM, trailing 12 months, another term to remember. Now, a stock with a PE ratio of 20, for example, is said to be trading at 20 times its trailing 12 months earning. So in general, a lower number or a multiple is usually considered better than a higher one, right? So when you look at the telecom equipment marker, it's the guys we just talked about. It includes Nokia, it includes Huawei, it includes Ericsson, and it has many others. But this equipment market saw an overall growth of 4% in the first half of 2020. If you're still with me, remember 2020, the year of the pandemic, 4% growth? You mean these guys weren't crashing? There's something more here than just a Reddit forum. There's something more here than just YOLO bets. Now, why am I telling you this? Because you're sitting there thinking, if you're still holding these shares, you're panicking because you didn't want to sell. You listened to Dave Portnoy, you listened to Mark Cuban, and you thought it was a good idea. But if enough of these vendors were able to retain their ranks and retain earnings and to actually be profitable over the first half of the year, when they had a track growth in Q2 that was a 4% decline in the first quarter, they were able to make up for that in Q2 after we had the news of the pandemic. This is pretty important to be paying attention to. Now, as they're seeing change in their revenue share, the Chinese vendors are excelling because they're rolling out 5G throughout China during the pandemic. But maybe we'll be doing that here. So the average for the competitors is 22.58 times the PE ratio. So it's trading at 22.58 times its trailing 12 months. Nokia, 15.65 times. Now, that might be important for this market. But if you guys aren't familiar with technicals and fundamental evaluations of the entire market, let's look at a fund called the S&P 500. And when we look at the price to earnings of the S&P 500, we start to see, and these are the ones that really are, it's the big index. It's where a lot of the companies that you've come to know are traded, and they're put into this thing called an index. Now, the minimum was back in 1917. Yeah, great, 5.31, right? But the median right now has been 14.84. So you're really looking at how Nokia is really fitting in the middle here. But right now, the current S&P 500, right before this call we had tonight, was looking at a ratio of 38.5, trading at 38.5 times its last 12 months earnings. So if the S&P, where all of these people are stocking their 401ks, stocking their investments, putting money in there, and everything is okay because, well, Wall Street's doing great, our economy is fantastic. If they're doing it for the S&P 500, why are we not thinking about it for ourselves in these small penny stocks and the ones that perhaps you're invested in right now, wondering how you're going to get out? Maybe you don't need to get out. Maybe you should be proud to hold Nokia for the long term. Now, this is also an extended chart of the last 12 months. Now, I've compared this then to the NASDAQ, the Dow, and the S&P 500. Now, you'll certainly see that there's some spikes, dips, ups and downs. It's a roller coaster because that's what the stock market is. What we have here is in the last month, this huge escalation, this rise up. Now, it's not to say it's bad. It's not to say it's good. Sure, it's a gigantic spike, but it's not like the S&P 500 or the NASDAQ or the Dow haven't seen spikes like this before. It's not crazy. The mainstream media is saying how awfully weird this is, that things like this are happening. Hedge funds do this every day. The guys that many of you are playing against on Wall Street do this all the time. They just happen to throw $1 billion into the market where you throw your $200. A little bit smaller, but because you've all organized on Reddit and Twitter and other platforms, you have an advantage here. You can actually transform the price of a stock. Now, I talk about Nokia because it is important. It's probably the only one out of all these stocks that actually has what could be determined as any underlying or fundamental value. So what does that fundamental value look like? Well, telecom networks are important. We need them for cell phones. The target price is $4.31. Sure, it's lower than what, the price is right now or where perhaps you might have bought it. Me personally, I've been buying Nokia stock for a long time under $4 a share. It's in my 401k, so that's a disclosure, right? I have some of these stocks, but also recognizing that maybe this is a good investment. If analysts are offering the 12-month price targets for Nokia at $4.31 and they have a high forecast of $5, damn, this isn't such a bad investment for now, of course, because while the impact of Nokia's share price is nowhere near the excesses of GameStop or AMC, those two companies, those shares climbed more than 400% in the past week alone. Now, Nokia has only jumped 30% since January 22nd, sorry. So it's about a week that we've seen this jump. Now, it's being driven by people like you. It's also happening to raise the price over in Finland as well. But to be fair, this type of price increase is normal circumstances. It results from prospective dealings all the time. Now, yeah, it's a big move, but it's not completely outside the realms of normal volatility. And by the way, last year when we were talking about 5G in China and all of the Singapore investments, Nokia was trading at this big last year. So when you look at revenue, certainly Nokia is not picking up the most revenue share, but it's not doing poorly. And it's actually a larger market share than some of these other guys. So why should we be ignoring it? Why should we be prevented from going onto platforms to buy it? For the people who are involved in GameStop or AMC, this isn't something to say, look, you guys are doing something terrible. It's so bad. Recent share surges may be life-changing. I'm not mocking it because six weeks ago I was, and I have friends who have gotten rich. But investing in general is extremely speculative in nature. It's completely risky. Wall Street learned that the tough way this week. Certainly they learned it in 2008, but they've been bailed out. They've made the rules, and when the rules didn't follow what they needed, they changed the rules. So while you might be looking at seeing how you wake up tomorrow to get back involved in GameStop and you're hoping for a short squeeze, the way the fundamentals look is that most of these large hedges have sold their shorts. They were able to decrease the price today by preventing volume to hit the market, and they were able to exercise their options at a lower price, buying back those shares. But who's to say they're going to hold them? It's time to really reconsider what this all means. So while neither GameStop's video game stores or the AMC cinema, where you go and watch movies, is making a whole lot of sense in the long term, especially during a pandemic, especially when video games can be bought online, there is a good idea for Nokia. In the first half of 2020, they managed to hold 14% of total revenue share of the market, and they remained the second largest telecom equipment maker globally. That's something you should care about. As a retail investor, you're not crazy. You know, you can listen to the media that's saying this is absolutely insane, but is it? I challenge that. So that's the slides that I wanted to go through with you guys, just explaining what's happening, why you're not crazy, why perhaps GameStop is entirely speculative, and really just checking out what's going on in the markets. Now, I'm happy to sort of have a discussion, talk to everyone. We got about 20 minutes to the end of the hour, which I had booked here. But I think it's quite interesting that we've gotten a group of people. We had about, at one point, 20 people who were here. And there's plenty of others who are looking for the recording later. So while I'm not making any advisements against stocks that you're investing in or things that you're looking at, I wanted to do a little bit to explain what the short sellers were and what the shorts are happening on the market, and actually demonstrating that you're not doing something crazy. These things happen every day. And perhaps from a person who's looking at it from a technical perspective, could give some guidance into these things. So where are you guys at? What are you invested in? What are you doing?
I'm investing in trading sectors going over.
Who do we have talking?
I'm going into AMC.
So we'll just mute them.
Cool. Yeah. So Ryan, it's really interesting presentation, and I really enjoy you doing this. This is definitely something that's shaking up a lot of things. So what are your thoughts now with Robinhood opening back up tomorrow to let people trade some of these stocks? Do you think it's stupid to try and dive into a lot of them, especially GameStop, or is it still a good opportunity to do so?
So some of the things we mentioned, and we talked a bit about, what's good ideas, where should you be investing, and how you should be investing. Now, when you think about fundamentals, you're looking at, I just showed some information about price to earnings, which is a metric that many institutional investors will use. The S&P 500 is notoriously known to be traded well above its price to earnings, perhaps saying that if it's at 36%, that means it's going to take 36 years to pay back on average the earnings of that investment. Now, right now, at this moment at $193 a share, GameStop is trading at 194 times its trailing 12-month earnings. Its PE ratio, 194. So are you willing to wait 194 years to get your investment back?
Not at all.
So I'm not giving investment advice. I'm simply going through the numbers because many of us are following the trend. We're on Twitter. We're sitting at home. We're bored. I mean, it's 8:45 on the East Coast, and we're sitting there going, "What am I going to do tomorrow? I can't see my friends. I can't go to the bar. But damn, I can get involved in Stonks. I can see what these guys show on Reddit and be a millionaire tomorrow." And it's that type of speculative trading that can be tremendously risky. And let's remember, 2008, who got bailed out? Was it Main Street? Was it the little guy? Or was it Wall Street?
What was the first one? I mean, it was everybody who invested in the housing market.
But was it Main Street? Was it people like you and I?
No, of course not.
I mean, throughout all these stocks, I might have $1,000.
No, and that's exactly what I was thinking about here is they took this day off of letting us trade because they wanted to put forward call options so that they can cover the losses on what's going on with the whole GameStop thing.
So I think we have a few law practitioners who have joined us, but not trading or securities attorneys, but certainly looking at, there was a class action lawsuit filed in the Southern District of New York this morning. There are technical questions as according, to what was allowed and what wasn't allowed. So that will be decided in court. There was an injunction that was also a part of that said that every market should reopen and that all of the stocks should be allowed to be traded. Perhaps that had an influence. Now, if you're one of the people that was waking up this morning to try and buy more, the only problem that existed was that there wasn't going to be shares to buy and there wasn't going to be capital in the markets to buy those shares. There wasn't house money. This is a goddamn casino this week. And you went to the casino, you went to cash in, and they didn't have chips. You brought $100 and they didn't have any chips to give you. And that's not bad because you can imagine somebody right now putting their mortgage payment on the YOLO bets. You can imagine someone putting next month's rent on the YOLO bets. Now, I'm not saying that these things, are bad because people have become millionaires. People are making money here. But are you in it for this weekend or are you in it to be a long-term investor, strategize, learn, educate? If I had a following that we would do this all the time, I just was like, yo, YOLO, let's get online tonight and talk about this. I think it's awesome that there's people who are interested in this. But there's I'm getting messages about Bitcoin and Doge and why you should invest in these things. So I don't know who that is because I don't have your full name on that. But if you're thinking about that, another speculative investment vehicle. Reason why it's difficult to gauge the actual value of these coins or these cryptocurrencies is because there's nothing that has underlying value in it. The only value that exists is what someone else is going to pay you. Wow, sounds like a Ponzi scheme, but they haven't defined it like that yet. Certainly we can make money on the cryptocurrencies, but something that's different about these stocks, these ETFs, and these long-term investments are that there's actually a company. There's people behind that. There's people that go to work every day and earn a living as well as revenue for the companies that we can invest in. Many of these companies that you can invest in are literally going to pay you back on your cash dollars, looking at dividends, and maybe that's something we cover later. So to the cryptocurrency guys, glad for stopping by, but underlying investment value doesn't necessarily exist there.
All right. I would love to talk about crypto right now, but I do need to run. Thank you so much for this presentation. This was awesome.
All right, Alex, take care. Anybody else? We got few people left.
How does what happened this week impact the future of shorting stocks for these investors who want to just kind of counter what they think is going to happen?
So you have to imagine that there's going to be regulation. And the fact that you could trade and you could short over 100%, perhaps even all the way up to 200% of an investment vehicle, meant that you would be trading the shares 1 and 2 times over, but they're borrowed shares from someone else. So basically, you'd have to go out and start paying other people an extreme amount of money to actually get those shares to acquire in the market. So you have to imagine that Congress is looking into this, that the SEC is looking to regulate this, as well as what you've demonstrated is the ability for the people to organize. So this is why I say it's bigger than Occupy Wall Street. This isn't people just heading down to the actual idea of sitting back and perhaps destroying a community. This is literally people taking their hard-earned dollars and deciding to fight back, to actually use their voice. I mean, you talk about freedom of speech and censorship. Perhaps the dollar today on the market was censored. Maybe it was. The courts will decide that. But the other part of this is really the idea that you could take your $200, your $1,000, and you could not manipulate, but invest in something that you believe in. It's all speculative. Everything in this goddamn market is speculative. If Apple can trade at 30 times earnings, why can't Nokia? If Tesla can trade at 1,400 times earnings, why can't GameStop? Because the goddamn millennials love it. These are the questions that I'm challenging others to ask. But I'm also thinking about ways that others can start to get involved in the markets through fundamentals, through education, through means of actually getting involved in long-term holds in which 4 and 5% returns are great and they're decent and they're appreciated. When you think about it right now, mortgage rates are falling below 2%. If you could earn 5% on every dollar you put into the market, you're going to be paying that student. You'd be better off investing it than paying your student loan. For those who have mortgages, you're better off right now investing in the markets because of the fundamentals. This is just facts. These are numbers. So it's hard to gauge. But you have to realize is that these things are scary. Looking at the market volatility today and yesterday, there was simply not enough capital. This is the scary point that affects our future, because if we're talking about, we started the call with the idea of bear and bull markets. If we really think we're on the verge of a bear market that's uprising or coming soon, this is one of the things that could potentially cause that, because the problem in 2008 was lack of liquidity in the markets. And what that meant was that there was not money, not any capital to go ahead and cover when mortgages were falling apart. And that was due to people who were speculating. They were trading housing mortgages and bad debt that they claimed was good debt, and it wasn't. And that the lenders were never going to get paid. Now, what you're seeing today is that big banks were hedging, and I don't mean that in their garden or their bushes out front. They gambled. They borrowed money. They used cash. They used capital, and they found a way to bet against small, low float, which low float is something that there's not a lot of stock available to buy. So there's not a lot of volume, and it's low float. And they're able to short it because they think the price is going to go down and they're going to win big. But Reddit changed that, and you guys changed it. And I think this will continue to happen because there's nothing that prevents the community, especially those that are fed up, that are angry with what's happening. Regardless of where you are politically or the stance that you have in that, there's something about right now being home, a global pandemic, things that have changed, things that are occurring. So if you can find a means to earn an extra buck, to be a part of something bigger, to find a way to socialize outside of the four walls, but do it in your extra bedroom or to do it in your living room or from your cell phone, these are things that will continue to keep happening. And there's nothing that prevents all of us from organizing tomorrow to go jump in on another stock. I'm not advising any of these stocks, but I wanted to explain just really through this little time that there is value in some of these. It's not completely just throw YOLO money into the markets. But you have to believe that there will be regulations that come. So like what type of regulations? Just getting a text. Again, I don't know the symbols there, but what type of regulations? When you look at being a qualified investor or an accredited investor, there are certain terms that if you're looking to invest in certain funds or to certain partnerships or businesses, you need to be an accredited investor. One of those requirements is to have a high net worth, to have a high yearly earnings. You have to actually demonstrate that you've earned a significant amount over the last two years, 2 tax years, and you can become an accredited investor. And perhaps that's one of the methods that could happen here, that someone, the regulators could institute that you need to be some type of accredited investor, so that you don't have these YOLO bets or these 14-year-olds who are throwing $100 into the market That's some of the things that might be able to happen here. Anyone else?
So I'm not much of an investment guy. I only use Robinhood every now and then. I have like 2 investments total, but from what it and I don't understand much of what you said if I'm being honest, but from what I was able to understand, yeah, no, we definitely need to regulate. And you've come up with great ideas. Is there anything else that we could do to regulate? Like as an individual, could I like do anything in particular instead of just like grouping up with friends and trying to find the next best stock?
So Joey, I mean, it's interesting because you've come into this chat mostly from our meeting when I was your teacher in a social media informatics course, one that I still teach and one that was a topic today of discussion in terms of, you know, censorship, the legal and ethical standpoints. So it's literally the chapter that we were discussing. But while we extend that out of just social media, we also extend it into these platforms. Now, social media was also censored in the last 48 hours, right? Discords were taken down, Twitters were taken down. So it goes back to some of the fundamentals that we together built, right? We're talking about fundamentals in the market right now in this little chat, but thinking about to our experiences together and fundamentals in social practices and social media, authenticity, transparency. One of the things that you may not have been aware of that GameStop is trading nearly 200 times its earnings. That's transparency. That's reality. For others who are speculative in nature and are participating in this, if they're not sure of these fundamental values, it's not transparent. And frankly, these markets are not transparent. So there's something to be said about learning more. But ultimately, how we as individuals get better at this is we have to think back to what our values are. Are we going to be true to ourselves and our friends? Look, there's lots of stuff on social media. This came out of a Reddit community. And if the older boomers are not on Reddit, I'm sorry. But we're no longer on Facebook. We've been on Reddit for a few years and it's anonymous. And we can chat with our friends and we can find ways to call to action many others. And right now is like I said, great opportunity for it, great timing because people are sitting behind these screens. So how you can be better is going back to the values of all things you do on social media. Fact checking, making sure you're truthful. While I think that we can all be better in terms of questioning others and learning, I think it's amazing the opportunity that's ahead, right? We have the opportunity to organize for all of our calls to action. Something that came up today was about the Ice Bucket Challenge. Now, the Ice Bucket Challenge was something that was able to raise a lot of awareness for a cause. Did it raise money? Well, I don't know. Certainly there's some numbers that start to say that yes, the Ice Bucket Challenge was able to increase the charities bank holds, but there's also something to be said about, was that the purpose? Was the purpose of the Reddit bets or Wall Street bets to go ahead and raise the price of these stocks? Perhaps they were. Perhaps there's another intention, and that there's another positive that comes from this, is that there's a kid out there or there's a millennial who's sitting in their bedroom right now and they have a community of friends that they can throw $100 into a market and they feel like they're a part of something bigger than themselves when they've been stuck in their bedrooms for the last 8 or 9 or 10 months. There's a lot to be said about the importance of timing the market, timing where we're at, and really being always open to opportunities. The best thing that we can be is transparent and authentic with each other and our platforms, no matter where we go, what we do, and how we do it. I think that's going to be clear whether tomorrow morning we wake up and buy GameStop or not. Certainly, I think that there's reason to believe that these things are bad gambles, but there's also crazier things that have happened. Best thing to be knowledgeable, informed, perhaps deeper research is necessary for that, but ultimately to be honest with each other, because while right now we all seem to be on the same page, just remember, anybody who bought GameStop stock above at the price that it is right now wants someone else to buy it higher than they bought it for. There's still a few of you guys here. If you have any questions, we're just wrapping up the hour here, so feel free to share. The chat's open as well.
Thanks, Raiker. Great shit. Got a lot out of this.
Who is that that's here?
It's Adam here. Sorry,
Adam, good to see you, buddy.
Yeah, hope all is well. I don't have my camera on. I'm eating right now.
Well, no worries. I'm glad you could join in. Hopefully you learned something, and hopefully I'll see you soon, man.
Yeah, for sure. For sure.
All right, we got Timmy White putting the camera on.
Yo, what's up,
dude?
Brett? So this is interesting because maybe the past like month or two, a lot of my friends have really gotten into the market. I'm like, my knowledge is very primitive of all of this stuff. I really just trying to learn myself, but it's always something it's been very interesting to me, but especially recently because a lot of my friends one of my friends got into day trading and he really made out pretty well, and they all have they put me in their group chats now, and they're really into it. So it's just something. And then this thing with the YOLO bets happened, and then now I'm super interested in all this stuff, and it's something I've always wanted to really get into. But like I think one of your friends said, myself, I'm pretty, I understand bits and pieces of this, but there's still a lot I need to learn. But I love that there's people our age, really, you guys taking the time to do this. I mean, this is great, right? So thank you for letting me be a part of this and putting this up on Facebook for me to see and be a part of, because I think it's really cool.
I'm glad you're here because I couldn't do it without you guys. Otherwise, I'd be just talking in my bedroom. But it's cool that we have this. And the other thing is, some of what I'm hearing from you is like, hey, I've never been a part of this. I'm hearing some of that fear of missing out, which is traditionally seen in social media and these trends. But the other big important part here is staying educated, right? Getting more information, but also thinking about how many are unbanked. Many are not in the markets. Many, when we refer to, politically, because Timmy and I are friends from politics, when we talk about politics and elections, we often say, well, the economy is this and the economy is that, but we also don't have buy-in. And we're also perhaps the poorest population or the population who has been burdened with the most debt, whether that's through student loan debt or other means, just based on our earning potential in comparison to a person of the age of a boomer. So millennials are certainly at a slight disadvantage, and I'll argue with someone another day about why that's important. But it's also just about, getting involved, because if you have buy-in, imagine how much more important these international trade deals that we're talking about. What is the things like pipelines and oil wells matter to you? And does it matter that Tesla's going to have electric vehicles? Look, if you have a share of it, you own a piece of it. Even if it's a small piece, there's still buy-in. I think that's important, and I think that everyone should try and at least do something to start learning more about this. Personal opinion, but definitely that once you start doing these things, you feel motivated. You do feel empowered, and you do feel like it's important to watch some of these international and national things that are occurring. The economy is not the stock market, but certainly we should start to think more about how we can be involved in this economy. So that's the end of the hour. If you guys don't have anything else, it looks like it's a handful left. Stop the recording if that's all.
Yeah, no, I don't have any more questions.